Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:04 in the AM. Getting started late today. Eastern Standard Time, the 15th of July, halfway through the month. So, yesterday we had earnings come out from JP Morgan Chase, Citigroup, Wells Fargo, First Republic Bank, Delta, and all of them, well, the banking sector anyway, rallied. Uh, Delta rallied. And today we're going to see in the AM United Health, UNH report, IBM. Is that after hours? I guess it's after hours. That's going to be really interesting. IBM. Goldman Sachs this morning, US Bancorp, a bunch more banks, Alcoa. That's going to be interesting because the material names have been on fire of late. So another interesting day. No tech names. Hey, good morning, Patrick. How are you, sir? And let's just take a quick look at tomorrow. Okay, so tomorrow we get some tech. We have a staple name, J&J, Taiwan Semiconductor, though, tech, big tech. Netflix, huge. Tomorrow, Bank of America, more banks. Morgan Stanley, more banks. So tomorrow, a huge day. You get a broader view for how earnings are rolling out. And I just want to take a quick look at Friday. Ericsson, no biggie. Used to be a biggie. More banks. And then next week we get a slew of the regional banks. This week it's the money center banks. Next week the smaller banks. Okay. I want to take a look at Kansas City Southern. That's going to be interesting. Kansas City Southern has been rallying along with the rest of the transportation sector. Take a look at this price action on KSU. Very, very nice. All right, let's take a quick peek at the futures action. We've come in here a little bit since I went to bed last night, not that much. We popped up higher, which I was surprised about because the president will be revoking Hong Kong special privileges, and I thought that would weigh on the market, and it did not. So the tensions are really ratcheting up between the U.S. and China. So we're up about a half percentage point. Consolidating nicely. Here's that gap. Let's go to a 4-hour chart, get a better feel. It's a 15-minute chart. we may come in here and fill this gap. Moving on to, oh boy, the Russell 2000. Ooh. Ooh. That's a big bearish candlestick. And this candlestick opened up at 5 a.m. Yet we're still up over a percentage point. Now it makes sense. Okay. Um, this scroll bar was just showing Monday. So this is more accurate. I was wondering what the hell I was looking at. Okay, so this is Monday. My apologies. This was set up wrong. Uh, nice comeback here. We're up this morning, looking good. Resistance right above at, let's call it, the highs of Monday. Actually, a little bit higher at 14, let's call it 1452. Good morning, Reno. I'm not into the banking sector that much myself, so we're talking about it. It's the topic du jour, and the fact that you're seeing pretty poor earnings, yet the banks are rallying, uh, is interesting. But I tend to agree that at this stage of the cycle, where you have a stagflationary environment, you don't want to be long of the banks, but the price performance is the price performance, and we want to take a look at it and have a conversation about it. The NASDAQ 100 up spot 42%. Great reversal yesterday on the XLK. mRNA, Pat? Wow. Oh, Moderna. So I guess this is a vaccine play. Pat, am I right in saying that? Yeah. Moderna releases COVID-19 vaccine phase 1 interim results. Nice. Are you long on this, Pat? Hopefully. Crude prices. We saw a drawdown in crude prices yesterday, and congratulations, Pat. Oh, okay. I got you. I just saw your last entry. Um, you saw a draw in crude prices yesterday after hours, and oil has spiked up. Now, I was just discussing with members last night on Market Wrap that I was finally warming up to the energy sector. So that may be a play that we'll be looking to put on fairly soon. Because again, at this stage of the economic cycle, you want to be looking at utilities, you want to be looking at energy, high tech growth, avoid value. Let's take a look at the 10-year. No, I would push back on that and say that what you're seeing is money rotate out of bonds and into stocks. Now, were you to tell me that the VIX was up this morning, which I'm certainly going to check out, I'll be more concerned. But you're seeing some weakness on the VIX. I mean, the VIX in the back half, not the back half, the final few minutes of trade yesterday simply got pummeled. And that was definitely a concern going into the trading day, was that we would see a potential breakout on the VIX. And yesterday was a pretty ruthless beatdown. Hey, Bob, will markets run the vaccine news, or mRNA will pull back like last time? You know, I'm a technical guy. I think that the markets are running on vaccine right now. At this stage of the game, they're running on a vaccine hope. Will mRNA pull back? I think that requires a look at the technicals. We could certainly take a look at it, but you're only at a phase one stage on mRNA, so I would have to assume that uh, you're going to have balloons floated out there trying to beat the stock down. Fake news. Uh, then you're going to have your pumpers putting out news to the positive. So you're going to have a lot of volatility, no matter what. You always have volatility in the pharmaceutical names, especially COVID. This is a market right now that is looking for a life preserver to get us through the elections. And it appears as though the fact that we shrugged off the very, very bearish, especially for China, the very, very bearish revocation of Hong Kong's special status, that's important. Yet the markets haven't flinched. Let's check out precious metals. Palladium up this morning over a half percentage point. Looking good. Platinum up 1%, still consolidating here. Both of these have broken out on a weekly basis. You're welcome, sir. Nat gas up about a third of a percentage point, consolidating very nicely here. We're holding last week's gains, the past couple of weeks' gains. Gold. Gold continuing higher. We broke out on a 4-hour basis overnight. Now what we're doing on this 4-hour bar here, which is currently red, we're going to pull back and do a retest of the breakout point. We'll see whether or not that holds. It probably will. But if we're talking about gold, we need to talk about the dollar. And the dollar continues its decline. Watch for a break below 95.72 on the dollar. That would be pretty significant. Here's a dollar on the weekly basis. You know, we're keeping a very close eye on the dollar. We're keeping a close eye on bonds. Because both speak to the confidence that the rest of the globe has in the United States. Let's take a look at silver. Yeah, NY. Good morning, Yang. I went in with good intentions a while ago. I said, you know what, I'll keep a few shares, and it was just so weak. I said, you know what, screw it. I'm not carrying this thing. I'll wait for a reversal bar and a change in market sentiment. It's probably not going to happen until after the election. So silver up. Very nice. And I want to take a quick look at corn. So we pulled back off the highs of last week. We're up this morning. But let's keep in mind, folks, weekly chart, we have a breakout here on corn, on soybean oil, oats. This is a breakout that's failed. Wheat, it's broken out. So you're seeing, by and large, a breakout in agriculture names, in metals. Your corn's growing, Pat? For those not familiar, Pat has a beautiful garden. All right. All right, I have a bunch, and I do mean a bunch of members' stock chart requests to go over. So we're going to go until ideally 5:30 this morning, and let's get to it. I am going to be using our sponsor, TrendSpider. TrendSpider is the next generation of automated technical analysis, and I use it all the time. It's my spell check for technical analysis. I'm learning the market scanner feature. It's very good. And in fact, one of our members who just joined is a gold member. He's getting special training with them, which was quite nice of them. Tommy, if you're out there, let me know whether or not. Let me know how that works out. I'll follow up with you anyway. And if you're interested in TrendSpider, I do a lot of business with them. There's a discount link below. Use the link, use the discount code, and you get 35% off. You're not going to get a cheaper price on the internet. So take advantage of it. All right, I have the following charts to go over. VXX, DKNG, WFC, Work, WRK, SPG, ZYXI. So let's get to it. VXX, that's the volatility index, no? Yes. All right, monthly chart. Still a threat. And man, you could see this consolidate for the next couple of months, and then boom. It's a threat to this market, no doubt about it. For those not familiar, this is the ETF, or ETN, I should say, putting you long of volatility. And it's frankly scary, the fact that we're still trading above 29 on the VXX. In fact, this thing I think is, yeah, it's still above 30. So consolidating nicely, doji star formation, but it's only halfway through the month. A lot can happen. We can't really go by the monthly chart. This just gives us a higher level view of where we're at historically. Weekly chart. The weekly chart is still showing that we are up on the week, but we're off the highs of the week. I'll be watching for a higher low on VIX. And especially watching out for a breakout. Daily chart. A bearish reversal bar yesterday. There's a big disparity between where the VXX is trading relative to the end of day VIX. So I'm not sure what contract these are trading off of. The VIX yesterday closed at 29.52. The VXX, assuming that there's a correlation between the two, I'm assuming that this is probably a later dated contract, closed at 33.21, so still above 30. But a bearish reversal bar would probably retrace down to 31.48. We'll see if it holds. Would I buy here? No, I wouldn't buy. If we manage to gap up, close back above 34.79, thereabouts, then I would entertain adding to or opening a position. Or if we were to pull back and hold, reverse off of 31.48, that would be interesting as well. To add as a long, or add to, or open up a position, I should say. It's not a horrible chart, but it's still one in the very short term that favors bulls. And if you take a look at the VIX closing basis yesterday, very similar in terms of price action. In fact, I want to go to my annotated view here. And I use the VIX quite a bit. In fact, it got us short of the market just prior to that reversal the other day, because I saw that the VIX was up along with the S&P 500, and that's a harbinger of bad news to come. So we did lighten up on one long position, and we opened up a short position. So at current on a daily basis, yesterday was a very, very, very bearish day in that we closed down not below one support level, but two. And we're poised at current to make new daily lows. But still, the fact that you have VIX trading above 25 makes me very, very nervous about a potential sell-off in this market, just like you saw on Monday. So would I buy it here again? No. But there are areas of strength and weakness where I would entertain it. A close above 34.61, a reversal, and a potential close above 31.48. That's the VXX. DKNG. DraftKings. This is a Dave Portnoy favorite. Nice retrace. I'd say, just going using Fibonacci's in their head, we're probably at about the 50% retracement mark. Not that I use them all that much. Weekly chart. I like where we bounced this week. It was support back during the week of May the 18th. So we're in a corrective mode right now. Stokes are weak. RSI is weak. So the weekly chart doesn't have me all excited about getting long just yet. Yesterday's daily price action looked good. We reversed off of that weekly support level. You have the 20-day moving average, which is rapidly pulling back. It's probably going to cross down below the 200-day moving average. I have no problem with scratching the itch, opening up a trade here. But I would use a stop loss right below yesterday's lows on a closing basis. And ideally, I would love to see another pullback. And you may just get it. A consolidation within this wedge formation and accumulate, nibble, nibble, nibble. The longer the consolidation, the greater the validation of the support level. And then look to add more aggressively on the ultimate breakout. And especially on a retest of that breakout. So I would be cautious here, accumulate as confidence builds, add more on the breakout, nibble more on a retest, and then once you get that follow through, finish your buying. But remember, the weekly chart, it's still consolidating. We're still down on the week. Stokes are going in the wrong direction. So you're going to have your opportunities here. I don't see a huge reason to get aggressively long at this point, but I do see the reason as to why someone would want to begin bull operations on yesterday's bullish key reversal. Just again, use a stop loss right below yesterday's lows on a closing basis. And what I mean by that is if it could trade intraday down below yesterday's lows, as long as it closes back above 27.63, that's fine. It's probing the lows. It's testing, testing, testing. And that's a good thing. So DKNG, cautiously bullish. WFC. Oh boy. So I read a blurb yesterday. I didn't drill down into the article because I found it hard to believe. But the article read, or the headline read, and I'm very cautious about headlines and all the fake news that's out there. So fact check me. I encourage you to fact check me. I don't want to send out bad information. But I read that they had to cut $10 billion worth of expenses. I had no idea they had that many expenses. So if it would have shed $10 billion worth of assets, that would have been a little bit more believable. But Wells Fargo, long story short, is in a lot of trouble. Given their recent, when I mean recent, the past several years, of really horrible headline news, I think that we could be talking about a bailout for Wells Fargo because it is a too big to fail money center bank. And taking a look at this monthly chart, and granted, we're only halfway through the month. However, we have broken down below the lower band of support. And the next logical support level, if the trend is to be believed, which I wouldn't know why it wouldn't be, The next support level would be 22.07. Now, on the brighter side, this morning what we're seeing is weakness in bonds. Let's go back. Actually, that may be changing. What is this? This is a weekly. That's a weekly chart. Let me go back to a 4-hour chart. We're coming off the lows. So we're still negative. But if we see a pullback in yields, that may be the saving grace for Wells Fargo short term anyway, and the rest of the banking sector. And I think that, and I've been talking about this, but I've been wrong. Although we did see a fade in bonds yesterday, that if you saw a pullback in bonds or rally in yields, that would provide a bid for the banks. And I still stand by. I think the market's trying to sniff that out at current. Now, weekly chart, things brighten up here a wee bit, as they say back in the old country. Hey, Tommy, good morning to you. I took some time off last week, if you want to call it that. Just rested up. Busy's good, brother. All right, so on a weekly basis, we are... I should really change this. Let me get rid of this. We are holding a support level here on a weekly basis. This is definitely not my favorite bank. Possible higher low on Stokes weekly basis. Daily chart. A reversal day yesterday. We closed well off the lows of the session. As you can see here as well. Here's a quarterly view. Not my favorite bank. I mean, look at these Stokes on a quarterly basis. Just a disaster area. As opposed to JP Morgan, which is not wonderful, but not as horrible. So, not my favorite bank here. I'd be looking, if you're looking for the money center banks, JP Morgan, Goldman reports today, Citi, another disaster area. BAC, which reports later in the week. Before I got involved with this stock, I need to see some strength and a close above $25 a share. If you're going to do a speculative trade and buy this no matter what, and you're looking for a stop point, you could buy it. This is back to a weekly chart. Now, keep in mind, we closed out the day yesterday at weekly support. If we fail to hold, let's get a number up here. If we fail to hold 24, 25 by the end of business on Friday, and we close down below it, I would just stop out. Watch for another support level to get hit. Not my favorite stock. I think quite speculative, and at some point in time, subject to headline risk. Even more so than at current. And when I say subject to headline risk, when you see they need to cut $10 billion worth of expenses, it's not it's not long before people start talking about ongoing concerns and whatnot. So be careful here. Work. This company inadvertently got some bad press yesterday. One of the editors at the New York Times, Barry Weiss, of the opinions section, resigned. And one of the reasons why she resigned, and she cited it in her resignation letter, was that she was being bullied on Slack, which is the internal messaging communication system of the New York Times. So not great press. It may mean nothing. Probably in the long run, it won't be because nobody knows Barry Weiss. But not the great press that they're using this as a tool to bully people. Frankly, it sounds like management over the New York Times is just absolutely horrible. All right, so we attempted a breakout this week. We've been rejected. $30.33 is critical support. Our Stokes are flattening out. They may hook back up here. Daily chart. We managed to rally off the lows of the day yesterday, but I'm not loving the price action. This bearish reversal bar was not great. We couldn't eke out a gain yesterday, despite the fact that the market's turned around. I would rather wait and see a retest of $30.37 before I got involved. Let's take a quick peek at the raindrop charts. Raindrop charts are a mixture of VWAP and which is volume weighted moving average. Not a bad close yesterday in terms of price action. You did see some buyers move in at the final moments of trade. So that wick or bottoming tail, whatever you want to call it, at the bottom of the candlestick. Yesterday, most of those gains were realized in the final minutes of trade, which is decent price action, but they couldn't push it positive on the day. We bounced off the rising 50-period moving average. Looks like we broke out on a 2-hour basis, but I'm no day trader. I would use this as a timing vehicle to enter a trade. Were we in a strong uptrend? We're not currently in a strong uptrend. Me personally, I would avoid until we hit the $30.37 mark. No compelling reason to get involved at current. But again, not bad closing price action yesterday. And you can see the final 2 hours of trade yesterday were fairly bullish. SPG. Simon Property Group. Commercial REIT. Are they a REIT? Or are they a management company? It's yielding 12.25%. The question is that safe? It is a retail REIT. I'm very, very torn on REITs. You know, REITs generally in this market or this business cycle, this stage of the business cycle, do fairly well. But given this retail apocalypse that we're seeing, and even before the pandemic, you had retail declining dramatically, and now it's scary. Monthly chart, you're seeing obviously we are in a downtrend. I certainly wouldn't buy this stock until after earnings are announced, because I want to see whether or not that yield is safe. You have a lot of people out there, business owners, not paying their rent, and that goes for the big box retailers, especially because they have the leverage. So the trend is clearly down. Big topping tail last week, meaning we sold off the highs, on the month. Big topping tails on the month of June. This month, no new monthly low yet, but we are down on the month and trading just off the lows of the month. Weekly chart. All right, so we consolidated, broke out, pulled back. Now we're retesting the breakout point. In fact, I want to move this up. Because technically, we are trading down below the breakout point. I wouldn't be a buyer of SPG unless we manage to close out. And the only reason why I'm going to set an alert here is because I want to track it. And I want to see what they have to say about earnings. I don't know what just happened here. All right, but the alert took. All right, so at current, I couldn't buy these shares. We're trading down below support again. Daily chart. I got you, Pat. Yeah. Very weak. Although I will say this, RSI did break out. We're pulling back and doing a retest. You need to see a close above, let's just say 63.50. And that's only for a nibble. I would add more on a rally up and through $66 a share, because you need to get this trend going in the opposite direction. The trend is definitely in the wrong direction. Would I short it? No. But I wouldn't be a buyer just yet. I would show a lot of patience. Possible higher low here on Stokes. And you're seeing the same thing here on stock charts. Higher low on Stokes. It's attractive, but price and volume matter most, right? So you have weak price action. It can't close above its 50-day moving average, and volume action is fairly light. So it's worthy of a watch. Love the yield. Is it safe? I don't know. I need to hear what their earnings have to say. I need to see what comes out during earnings. And if they cut that dividend by a couple of percentage points and it sells off, that may be the opportunity to get in. Not loving the daily chart here, but let's stay consistent. Monthly chart first, very extended, trading just off the upper band of the rising uptrend channel. You can see the wick, shadow, topping tail, whatever you want to call it. But it respected the third standard deviation. It respected the third standard deviation Bollinger Band and the upper band of resistance. It's the top of the trading range. Not loving it. Weekly chart. An inside week. No new high, no new low just yet. Still early in the week. A lot could happen. So no compelling reason at current to go buying. I'm watching the 70 mark here for a lower low on RSI. No compelling reason on a weekly basis to go buying Zynex. Daily chart. All right, so I said this earlier. I didn't love the daily chart. Why? We broke the rising lower band of support. And this may be a little bit tight. So let's do this. Let's give it some breathing room. I'm going to take this trend line off and create my own. Watch for a pullback to 25.36. You'll really need to see a bounce off of it, because if it fails, it'll drop down to an even more extreme lower band of support down here at around 24.30. So no compelling reason whatsoever to go chasing these shares right now. They're pulling back, they're drifting lower. Watch to see if these support levels hold. And then perhaps you get a reversal bar, and that's your entry point. But just keep in mind as well where we're at on a higher level view, right? We're very, very close, just off of the upper band of the rising uptrend channel on a monthly basis. Pat SPAQ. I've gone over here. I'm going to need to make this the last one. Oh, Spartan. I remember this one. Yeah, we knew this wasn't going to end well. I think it's still overbought. I think this can only be viewed as a very short-term swing trade. Yesterday you saw nice bottoming action, yet the shares could not close positive, and that's with energy up yesterday. This is a 4-hour chart. All right, so yesterday afternoon, 4-hour basis, we did not put in a new lower low. That leads me to believe that yesterday's bottom at around 1326 is defendable because it was support back here on July the 9th. There was also resistance on July the 9th. Excuse me. Hey, Sam, good morning to you. Our Stokes is still weak. Pat, I think that if you're looking for an entry point, I would eyeball that 1326 mark and use a stop right below the extremes of this candlestick on the 9th, and that is at 1277. Two-hour chart. A little bit of a breakout here on a 2-hour chart, but again, I'm not a day trader. This is a very, very short-term time frame, and it doesn't mean that we can't pull back, retest the support level, dance around the 1326 mark. I like the 1326 mark. You're beginning to see Stokes flatten out a bit, potential higher low on RSI, but again, I need to pound the table on the fact that this is only a 2-hour chart, very volatile. Okay, with that, folks, I'm sorry I couldn't get to everybody's request. We have a lot of new members, and they're submitting them for me, so I have to get to those. And I appreciate everybody stopping by and spending some time. Please smash that like button, and everybody have a profitable trading day. Be well.